Good morning, traders and investors. Thank you for tuning in here on Thursday, June 5th, 2025. Triple D and I got a good show for you. We'll start off with a little Oilers talk, maybe a little NHL playoff talk. We'll get Triple D's level of tiredness here this morning. On to news for the morning. We're going to be talking S&P potential additions. We're expecting S&P Global to announce some changes, inclusions, maybe exclusions for indices later this week. We have a couple of top candidates, according to a B of A note from yesterday or a couple of days ago. Is the Tesla party over? Elon Musk pissing a lot of people off. He is continuing to attack the Trump administration's tax bill. We got a pretty decent size IPO here this morning. Expected Circle Internet. This is a stable coin name. The ticker is CRCL. Earnings overnight, Wednesday afternoon, we had MongoDB, PVH, Five Below. This morning we got Sienna. Certainly a few notable earnings reporting tonight. We do have some jobless claims data at 8:30 a.m. here. A couple notable upgrades and downgrades that we're going to save toward the end of the show. Our guest here this morning at 8:35 a.m., Jim Tassoni, CEO of Armor Wealth Strategy, one of our favorite frequent guests to the show. Folks, let's get it going here on Pre-Market Prep.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. This is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
Triple D. Good morning. You don't look that tired.
What's going on? What's going on? I was just looking. Great. We got multiple breaking headlines here right now.
Oh my gosh.
Plus,
don't they know we're trying to do a show?
Go public? I know. So we're going to go right off the... And no rundown. You guys know where the market is. We're not doing rundown.
We don't need it.
We're getting right into the news.
Go.
We're a news show here. We're giving you the news. I'm giving you as it breaks. Plus, to go public, this is just breaking via merger with Churchill Capital Corp. IX. CCIX has got a company that they are going to merge with. Plus, I don't know what Plus Automation, but it's called a physical AI company commercializing AI-based virtual driver software for autonomous trucks.
Wow.
Isn't this like AUR? That sounds like they're the same, though I guess a software
like AUR
maybe for that. So CCIX is going to be, and just breaking here right now, is going to be an AI. It's going to be with Plus, which is a physical AI company commercializing AI-based virtual driver software. So if you're wondering why CCIX is trading up 7% here right now, very light volume, it is because this merger was just announced a couple of minutes ago here, I believe at 8 o'clock. I don't know much about this company. I've never heard of Plus Automation, but, you know, it's the sexiness is there, I guess, because AI
auto kind of, yeah. But I do think you're onto something there saying, isn't this what AUR does? I think so. Dennis, could you put the CCIX chart up there?
Oh,
I just got your charts up.
Yeah,
and then what was
charts? I'm not used to doing two things at once here. This is usually
good. You're good.
CCIX.
I'll give you some reminders.
There you go. You see a little blast off there.
There you go. So that was your first news item. Did you say there's two? What else did you see?
Yeah, so also breaking right at 8 o'clock. It's always fun when they, well, multiples actually. I got a couple other ones here too. UAL is going to announcing a collaboration with Spotify. So I'm assuming, I didn't read the details here, but I'm assuming that maybe you're going to get Spotify on your UAL flights.
That's kind of interesting.
Today announced a first of its kind collaboration that delivers an even more entertaining travel experience in the sky with 450 plus, we're just reading from the press release, 450 plus hours of content now available for free on the airline's 130,000 seatback screens, many of which offer stunning 4K quality and Bluetooth audio compatibility. That sounds like ChatGPT wrote that. That was really well written. So Spotify is going to be on UAL flights. Spotify has been a stock, and let's just go out, and I like to look at the 90-day here to get a feel. All-time highs. It got the upgrade, or the rating, not an upgrade, it was a buy rating there 2 days ago. That was at 670. We talked about that in the STN room. That's kickstarted the rally. It rallied all day yesterday. Now 705 in the pre-market here. The party continues. The party continues for Spotify. So those were the ones. Those were the ones that that just broke here right now that weren't on our agenda. They're talking the Oilers. Yes, the Oilers won last night. Yes, I'm happy. I am tired. I was up late, obviously, watching. You expect to go bed around 11 o'clock, thinking, 8 o'clock to 11 o'clock, but then they go overtime. And they played the entire overtime before Draisaitl scored in overtime with 30 seconds left. So the game ended just before midnight. So it was a late night. But I was saying to Joel, if you could chart my nervousness. Not I was saying to Joel, I was saying to Brent. Joel's not here.
I'm Brent.
You could chart my nervousness. At the start of the game, I'm very nervous. And then your nervousness in the middle of the game starts to go down. And then when they were losing 3-1, you're not nervous at all. You're just disappointed. But then all of a sudden, they tied and your nervousness starts coming back up. And then the overtime, your nervousness is up here at the top of the whole chart there. Peak nervousness, max, like breakout on nervousness there. Every time that Florida gets a shot, I'm like, oh, they're going to score. Oh, Skinner make the save. So anyways, my nervousness kind of went like that. So, big breaths at the end of it. They did win. 3 more wins. Not a hockey show, though, so we don't stick with a hockey show because we know what happens. We lose listeners.
You don't look, Triple D, you don't look too tired. You look good. You look like you're ready here for a market.
Not bad. It's not like those 10 o'clock starts where I was up to like 1, 2 in the morning. So I got a friend texting me, how was your heart last night? Well, right now I'm just talking about that, actually. So that's interesting. On a podcast.
So Triple D, your theme here for this morning, you wanted to go with news anticipation, and I love it. We got at least one big news item here besides earnings. Of course, we're talking about news anticipation when we're talking about earnings, but one thing that I think we should start off with here is on Friday, expected Friday afternoon, we have what's probably going to be a pretty big announcement. S&P announcing an addition to at least one of its indices. We have some easy targets here that a B of A note kind of clued people into a few days ago. Robinhood was mentioned, AppLovin was mentioned, Carvana was mentioned, maybe IB, like Interactive Brokers IB, a couple other names mentioned here.
Yeah.
And we've definitely been talking about this. I think we talked a little bit about in pre-market prep yesterday. We've definitely been talking about this a bunch in the SCN room. This is like top of your radar for the week, right?
I think so. Friday, 5:15, we'll get the official announcement. The rebalance, I actually believe, happens on the 20th, so 2 weeks later, the S&P rebalance, but we're going to find out what's going in and what's coming out. There's a lot of anticipation here that is going to be Robinhood. That's why I have it on the screen. Robinhood, which we were trading from the long side in the STN room yesterday, and some people were trading it actually during the day here because we were, talking this list. I do think, and it's funny, I bought some options. I was like, oh, I'll buy the Friday options because I can exercise those. And then I'm like, that math doesn't add up because IB makes you, only gives you till 4:30 to exercise. And we're not going to find out till 5:15. So at Interactive Brokers, you have to, you can actually exercise after hours. People don't believe that, but you can. Some of the brokerages are different timing on it. But if you're looking at Robinhood options, some brokers don't let you exercise past 4 o'clock. Interactive Brokers is 4:30. I know that's a trade options for years there. You can exercise up till 4:30. But we're not going to find out till 5:15. So those hood options, aren't going to be very good because we won't know to exercise them or not. So I do think these stocks could run ahead of this event. I think you are seeing that here right now. Definitely with Hood. Hood was up substantially yesterday. Is up another $1 this morning. I was long it overnight. I just sold it. I like to trade the overnighters, and then I don't like the intraday risk. Isn't that funny? I don't like intraday risk. And then I put it back on at the close again. So I've been trading this one from the long side. Also running into it. Not this morning. AppLovin. Is there news on AppLovin? Because AppLovin is down $6. It was up yesterday. I don't see news on AppLovin, but it is down here today, just like pretty suddenly too. Here, let's go. I'm going to get used to these charts. Yeah, I just sold off right now. Look at AppLovin, just going down right now. What's the news? It was 419. That's why I had the whole theme. I was like, AppLovin's up. Now this just fell apart. Something happened with
well,
AppLovin.
how does this price
that
action
move
change?
looks like news to me.
Yeah, definitely. So how does
this
I probably
price
won't do.
I got to see what the news is.
Yeah.
Well, it doesn't change it, for Hood at all, but there's a list of them, so I'm just going to go through them all. But I mean, if there's individual news, I'm not going to fight that. So I got to find out what the news is first of all, because we don't have the news here yet. But I pretty much guarantee you there's news. The stock doesn't just drop 9 points in 9 seconds here without news. Probably a rating. So we talked about this before, Brent. You worked on the news desk for a long time. And what you see is ratings don't, just somebody doesn't just get them. They're not press releases. Like press releases, everybody gets at the same time. Ratings are from desks, and one desk will get it, then another desk, and then it just gets handed around.
Circulating.
They take time to circulate. So when you don't see a headline right away and you see a stock moving like this, it makes me think that there's a rating. But something is going on here on app. It just dropped another $3 here. So I do not see the news here yet. We will keep digging here. We will probably find it soon. Bank of America again. Look at this. Here it is. It's a note from Bank of America on app 11. They're updating their e-commerce assumptions based on management feedback. Okay. So based on feedback we receive, we lower our fourth quarter 2024 and first quarter 2025 e-commerce net revenue assumptions from to 55 million or 110 million from 110 to 178. So they are lowering their the fourth quarter and first quarter e-commerce net revenue. So this is Bank of America poo-pooing on the stock. Funny, they were the ones that mentioned this as potentially going into the S&P 500 yesterday. And now all of a sudden, they are the ones coming out and actually saying that we are lowering our e-commerce revenues. So again, it is a note. It's not a rating, but it is a note from a company that covers. They still, funny though, they reiterate their buy rating of $580 though. So even though they are lowering their net revenue assumption, they are actually still keeping their $580 price target on this. So I don't know. Do you buy the Bank of America dip because they're still got a 580 price target on it?
I don't think this changes anything for the trade this week, the potential trade this week here on this S&P additions thing, right? It just maybe the stock's a little cheaper now here.
Maybe it gives you a chance to get in on the cheap. Maybe. John's saying maybe Bank of America wants to get in on the cheap.
maybe Bank of America wants to get in on the cheap.
No, we're not going to speculate something like that on the show. But
okay.
Yeah, so let's see where it closes. I like the closing trades and the run-ups overnight on these things, but Mr. T's been playing them in the STN room. He's just been long these things and says they've been working. So app 11, if you're long right now, they're getting hit. I don't like the intraday risk or the pre-market risk. So it's bouncing back a little bit here right now. That's the news anyways. Let it digest out there, see what happens.
Just to mention, we didn't mention Hood, of course, App 11, Carvana, IBU. Those are the ones that I mentioned that were in this B of A note from, I think it was Tuesday afternoon. Also, Aries Management, Viva Systems, Flutter,
Carvana,
and Cheniere Energy. But those four, Dennis, we said those are kind of like stretches. If you want to take a look at Carvana, I get it, but you were wanting to talk Tesla here. If you want to talk Carvana, go for it.
We'll stick with this just for one more minute here. So we're going to give that list again. So the Bank of America list was Robinhood. I think it's going to be Robinhood. I think there could be 2 or 3 going in though. App 11, the possibility. Carvana's a possibility. You know which one I think it's going to be too, which has been rumored forever and nobody talks about it. I think it could be Cheniere Energy, LNG. That goes in.
Okay.
Why do I think that? Oops, hang on, that's not the right symbol. LNG. Wow, I suck at this. Joel's good at this. I always yell at him, but he's doing charts in the background too.
You're doing fine.
I think it could be LNG. Cheniere has been rumored to be going to the S&P 500 for years. I feel like it could be their time. Stock is now approaching all-time highs. They like them when they're at all-time highs. The S&P seems to always at them then. It's not quite there. It was higher here back in January, but it's on the comeback trail. I kind of feel like there's a possibility that this could be the one, that this could be the stock there, like one of them too. So it's not just one. We don't know how many. We don't know there's going to be any, but there probably is. So Robinhood, I think, and I think LNG. Those were my picks. Interactive Brokers, IBKR, is also on the Bank of America list. They won't do both. They won't do Robinhood and Interactive Brokers. They're too similar. So if Interactive Brokers goes in, that would be why Robinhood doesn't go in. So, and IBKR is a great company too. So, they're a possibility as well. At least Bank of America thinks so. So this is the list, not that I compiled, but the one from Bank of America yesterday that was circulating. Reason why you saw Hood popping up pre-market and, a lot of these other stocks popping pre-market. So once again, I'll give the list. Hood. I'll just go through all the charts. Hood, Uplovin, which is getting hit right now on the Bank of America report. Carvana, ARES, which is Aris Management. Viva Systems, which has really popped off. Holy, Viva's had a move the last few days. Really been popping off. Flutter, I don't think it'd be Flutter. Flutter, European company. Yeah. LNG, and the other one was IBKR. So those are the ones that they say are candidates. Now, it could, Bank of America could just have it wrong. It could go right off the board, and it could be someone you don't even think about. So you got to think about that too. ECB cut interest rates, by the way.
Yeah.
Today. Just talking European stocks.
25 basis points now.
Bank of America. Yeah. That's going to tick Trump off too, because everybody's cutting rates except Powell. They continue to cut rates. So ECB just cut rates here right now by a quarter. So yeah, so those are the potential candidates there. I am playing a few of these from the long side. I don't have any right now, but I've been doing them overnight. So I'll probably continue to play Robinhood again. I think Robinhood could run into it. Remember, Robinhood is a Bitcoin play though too. So if Bitcoin tanks, then Robinhood tanks. You could also, if you wanted to get, funky, you could short, Bitcoin against Robinhood for a hedge. So, which probably isn't a bad idea. But Robinhood is continuing to run here this morning. It's 43.75 here now. So continuing to go up. And if we just go and look at the 30-second chart, you can see the slow, steady climb here all night. So from the close right here to all night. So it's been slowly moving up. There are buyers in Robinhood, which we anticipated that there might be on STN, and yesterday mentioning it in pre-market prep. So that's our first story, which is a lot.
Your other focus on
second story is going to Tesla. Go ahead.
Nope, you did it. You did it, Dennis. You got it.
Is Tesla. So I was talking about this in the STN room yesterday. I also tweeted out as well. And Tesla is getting Musk here again. What has kind of happened, and we know he is attacking the spending bill, like full-on attack. We know he's called Navarro dumb as a sack of bricks in the past. We know it's been reported that he had a screaming match with Besant last week. He is fighting with the Trump administration. Not necessarily Trump, but everyone around Trump. Like Besant a month ago was promoting Tesla and saying, get out there and buy this. This is the best value company here ever. We know Trump bought a Tesla to show Musk's support. I got to think that Trump is probably getting a little bit ticked off with Musk parading around on X saying how bad his big, beautiful bill is. I got to think that's ticking Trump off. So what has happened here, and we can see the stock falling the last couple of days, especially if we go to the 30-minute, you can really see the stock is just leaking. So laying it all out, he obviously ticked a lot of Democratic voters off with aligning with Trump so much. Now he's going back and now possibly ticking off Republican voters as well. So we know the international sales have been down substantially because he's ticked off all those people too. He continues, and I'm using tick because Mitch says if you swear on the show, YouTube punishes you. So we're trying not to swear. I believe that he's ticked off a lot of potential buyers on both sides now and everywhere around the world. I think the stock market is starting to get nervous that Tesla, which is now trading over 200 times its lowered earnings because the earnings are actually going down projections, it's got a lot of fluff in it. And I would argue that probably 50 to 100 points, because we know when Trump got elected, that stock ran like 80 points on that. Probably you could say safely 50 points was baked into Tesla because of his goodwill with Trump, that he's buddies with the president and he's going to obviously get some special treatment in that. If that falls apart, you could see that 50-point premium come out of here in a hurry. Now, I'm still long some Tesla in my long-term account. I've been long some the whole time. But, I reduced the position by 90% back at 390 because I was worried about brand damage. I'm worried that he's now losing potential Republican buyers as well. And if Trump turns on him, like if all of a sudden Trump says, Musk, and he says something negative, this stock will get hit hard on that. Trump has not done that. Maybe he doesn't. Maybe he respects all the work he did with Doge and obviously helping him to get elected, that he's maybe not going to say anything. But you got to think that Musk going around all night, which he did, Brent, again, saying to stop this bill, the big beautiful bill. It's got to be
kill the bill. Bankrupting America is not okay.
Tweeting it.
Yeah.
Dennis,
so,
I think the politics are hurting Tesla stock performance here once again. I'm like we said yesterday, me and Joel said it sets up as a good short. We were talking about this in the STN room. I know there's a few traders like Intern who actually took the trade. You got the left shoulder here, the head. If you go out further, you might even see it better. Let's see. Left shoulder, head.
I can see it.
Little bit of a right shoulder. Now breaking the neckline and moving down. So technically, Joel says setting up for pretty good from the short side. Now, again, we were talking this at 336 in the STN room. It's down 13 points since we started talking about it. So you're chasing it a little bit at this point in time for the pre-market prep listeners. If you want this information, join Stock Trader Network. You get it faster. But I'm concerned as well that the sales now could potentially be dropping again. So he needs to stop with the politics, but he can't stop himself. He just can't stop himself. He is all in on politics, and he's got a social media platform that he owns. So it's safe to say that Elon is probably not going to stop with the politics. Eventually, there's going to be some permanent brand damage here, so we need this to stop. And the valuation, Gary Black, just one more thing, and I'll ask the question because I know it's a run-on sentence. Gary Black, who I've followed on Twitter for a very long time, and I'm not sure I mentioned this yesterday, but he's been in Tesla since 2021. He sold all of his stock last week at 558 because he's very concerned about valuation. He's very concerned about the sales falling. Same stuff that I've been talking about, I'm worried about the sales falling as well. So if you want to follow him, at Gary Black, but I'm trying to find the actual tweet why he said it because it was really good. We read it in the STN room yesterday, but yeah, he's talking about European registrations. He's talking about a number of things falling. Oh, I should have had it ready.
So can I, Triple D, can I play a little bit of devil's advocate on your shoulder here? Because,
please.
I think a couple big themes that you've been highlighting have been, one, robotaxi, two, humanoid robots, and one that you haven't been talking a ton about, but I'll add into this list, SpaceX. And I know that's not Tesla, but it's definitely Elon Musk. So do what's happening now with Trump in politics, or excuse me, with Musk in politics, does that change anything with those two or three parts of the Tesla thesis here?
Well, long term, I think it's a question of how much brand damage is done here. Like, is any of this going to be permanent if he continues to talk politics? There's a possibility that it could be. Right now, the brand damage, I believe, is still temporary and can be still temporary. But what I said on this show, he needs to stop with the politics. He can't stop with the politics, and now he's ticking off a whole bunch of more potential buyers. So, if Trump, and it's a scenario analysis, but if Trump all of a sudden he says, that Musk is wrong here, and this guy's an idiot, and don't ever buy his cars. If that happened, that there's a hardcore Trump following that will not buy Tesla cars. This is all an issue. There's a reason, and somebody was saying, I don't know if it was on STN or where it was, but somebody was saying there should be a case study done on why, and using this as the example on why CEOs stay politically neutral. This is going to be the reason. And obviously the stock's held up fairly well. I mean, it's 400 and it came off. We could argue that maybe none of this is priced in here even yet. But if the sales continue to fall, eventually there's going to be the market taking notice here, because this has been just an epic collapse really in the fundamentals. Not good at all. Gary Black's tweet, Tesla now trades at a forward PE of 180. In the history of the stock market, we can't find a single $1 trillion market cap company that traded at a forward PE of 180. Why not? The long-term growth rate needed to justify 180 PE, which caused Tesla market cap to be bigger than Apple, Microsoft, which seems insane because both have huge TAMs. He goes on and on, talking valuation, talking about the issues that we're obviously seeing, and I think robotaxi and Optimus can still be a driver here, but if you hurt the brand, people aren't going to buy your stuff, period. So there's some people out there that, I talked to and said, I'll never buy a Tesla because of Musk. I'm like, well, that's not good. So it needs to be forgotten that it needs to be politically neutral, but he can't do it. And now he
can't help
back
himself.
The other way. So you tick off all the Dems. Now you're going to tick off all the Republicans. Eventually, you have nobody left to buy your cars. And we can see that people aren't buying as many cars. So this is why the stock is going down here right now. The market is now very scared that Elon Musk is pissing off the right. That's where I'm at too. So I still have some shares in the long-term portfolio that I've tucked away under my mattress. If they go to zero, they go to zero. Like I said, I took out 90% of my, I sold 90% of my position from last year at between 410 and 390. And I just decided that I was going to hold this little piece because I made way more than I have left in the stock. So I'm forever playing with the house's money. If, you know, politics go away, I do believe there's a long-term thesis to be long Tesla here. But man, from the short-term perspective, I think you're selling into rips.
Tough. Let's we did just get Jim joining here. He's a little early. I like him being nice and early. Probably about 10 minutes or so. Let's see if we can sneak in an earnings, but I want to just touch on the IPO for today here, Dennis. Circle Internet IPO, the ticker CRCL. They priced last night 34 million shares at $31 per share. We should be expecting quotes in this to open, I'd say late this morning. We could get the issue opening late this morning or early afternoon. We don't have like definitive timing for when these IPOs, especially notable IPOs like this one, we don't have definitive time for when these are going to actually open. Huge underwriters on this issue. If you ask me, one way that you can get an indication on IPOs, the potential interest for an IPO is who is the underwriter for the new issue. Goldman, Citi, JP Morgan, Deutsche Bank, Barclays, SocGen, Canaccord, Needham, Oppenheimer, all were just a few of the underwriters for Circle Internet IPO. Seems like really a lot of tension here on this one. Dennis, do you ever trade IPOs?
Typically, no. And the main reason, I know I'm really because there's no trading on CRCL yet, so I didn't put the chart up there. But typically, no. Main reason is hard to control the risk. I'm at first a risk manager, second looking to make money. So whenever I enter a trade, always 100% of the time, I'm considering risk first, then return. Where is my out? What is my potential? Why am I in this trade? All those reasons. And where am I getting out if the trade goes south? These things are so hard to trade. They're so wild. They're really hard to control the risk. You can make big money in a hurry, but you can lose big money in a hurry as well. So typically, no, I typically don't trade them because the liquidity is really low. The thing will be all over the place, and it's hard to control the risk. What I will say is often, you know, the underwritten price can try to act like a floor. Sometimes they trade under it. 31 is the underwritten price. This is a stable coin company, Circle Internet Group, if you don't know it. I don't totally understand stable coins. I know, like for you crypto people, that, you know, when you're in Bitcoin or you're in your other ones, like, and when you want out, you move to stable coin, you don't move to cash. So I guess it's supposed to be like a cash equivalent. But then, you know, we saw some problems with Tether, and we saw another stable coin go under a while ago there. And I just think cash is cash, and I don't know what stable coins even are. But this is a stable coin company, Circle. The crypto world really likes stable coins. They use them all the time. So it's got the story for the crypto world, which could ignite it. So, but I'll probably set it out.
Probably be fun to watch. I don't know, I don't know if it's the easiest thing to trade. Just a heads up, we are going to get our initial jobless claims and our continuing claims data here in about a minute at 8:30 a.m. I'll break in here when I see those. We do have the jobs report from the Bureau of Labor Statistics tomorrow at 8:30 a.m. Just a heads up. Let's sneak in a couple earnings here, Dennis, before we go to Jim Tassoni. MongoDB with a beat for the quarter. Q2 guidance looked pretty good. They raised their fiscal year 26 guidance. They also announced that they're going to be adding $800 million to their buyback plan. They're now at $1 billion authorized for buyback. Shares here this morning trading up pretty sharply, about $33. That's about 17%. We were watching this one last night in STN. I forget if you didn't trade this one though, right?
No, I said I'm not going to intentionally take something in earnings because Emily was asking me, do you want to buy this one ahead of it? I said I kind of do. I said if you were like forcing me, I would buy this ahead of earnings because I think the bar is low enough. And Emily was talking about the gap that it's going to get into, which I like that as well. But I'm like, I just don't have the guts to take it into earnings. I know Mary took it in. Emily took it in. Somebody else took it in too. I don't know if it's DV, but they all had really good trades on it. So congrats to those traders there in the STN room that made a lot of money on this one. Its expected move is 27 points. It is outside that expected move right now, 233, but you were in the gap from March. So if we go out and we look there, we'll just bring that up for you and talk about this gap. You can see, I don't know, these IB charts, they don't show the gap. This is an actual gap here. I don't know why IB doesn't show the gaps, but this is the gap. So this should up in the chart up to $245, which was the low from the 3rd of these dates are also March 4th. So the one software of mine puts the month first and the date second, or the date first. They put the date first and the month
How
second.
dare they? How dare they do
anyways,
that?
yeah. So you got about 13 points yet to fill the gap. I don't know if it can do the whole thing, but it's in that gappy area. And why is gap significant there? Because when stocks don't trade there, they can trade through. Trades through an easy area. There's nothing in there. So it can trade through that area with a little bit more ease. But at this point in time, I mean, we're well above the expected move. Hard to chase it at this point in time.
By the way, those jobless claims, nothing too exciting. Jobless claims for the last week were a little higher than expected, 247,000. Economists were looking for 236,000. Continuing claims were a little higher than expected, 1.9 million versus 1.91 million. Market's kind of whatever on it. Again, we do have the jobs data tomorrow. Market's probably leaning on that. Let's do one more here quick before Jim. We have one winner with MongoDB. Here's our loser for the morning. PVH, they beat for the quarter, but they cut their guidance pretty substantially. They cut their fiscal year 25 earnings guidance from 1240 to 1275 to a new range down at 1075 to $11. They cited expected impact from the uncertain economy and tariffs. PVH here this morning trading down about $8. That's about 10%. What did you make of the PVH earnings, Dennis?
Yeah, I'm scared of the guidance cut. It's a significant guidance cut. I actually tried to short this last night, and then I got chopped around on it. And now I look back and I was like, I wish I would have just held my short. I should try to short it after the report because you were talking and breaking the guidance. I was like, well, that doesn't sound good. And the stock went down. I was up a bit, and then it chopped back up. And I was like, I'm just getting out because, you've seen these stocks actually rally on bad guidance before. So I'm like, I don't want to play around with this. But then it's leaked and continued to go down. So the guidance in the end did win the day. I mean, the stock, if we go farther on the technicals, we can give some Joel Elconin levels here. I mean, 70 is the next psychological level here, but there's really, it's all kind of sloppy in here. So there's not a clean setup. I mean, this low you could grab here, $7. It's a long ways away from here too. So I don't know if I'm going to catch this falling knife.
I hear you. Let's bring in Jim Tassoni here. Here we go. Jim Tassoni, CEO, Armor Wealth Strategies. How's your week been? How's your Thursday going, Jim?
It's going good. We're finally getting some warm weather over here after a really cold spring. Spent way too many cold and rainy days out on softball fields. So glad to finally have a warm up after this. So,
is that your softball or your kid's softball?
I wish it was, Dennis. I'm too old for me. I'd pull so many muscles. That is my daughter's softball.
I'm at that point now too, where it's all about the kids' sports.
Yep, I have relegated to sitting in a chair and yelling at umpires nicely from the sideline. So,
nothing wrong with that. Nothing wrong with that.
So, Jim, let's talk the S&Ps. We'll start right with the SPY here. I got the chart. I'll show the chart here right now. I mean, we have come so far back. I mean, unbelievably, that this market continues to climb this wall of worry. It seems like nothing can derail this market. We get news that China talks aren't going well. Market goes down for an hour. They buy the dip. We get, the European, whatever agency that was, downgrading the U.S. That knocked the market down for a morning. It's like this market dips and everybody is just there to buy the dip here. What shakes that? Or do we just keep going with the flow and just keep buying the dip along with them? How are you approaching this market here, Jim?
Yeah, at this point, it's become really hard for me to be anything but at least a reluctant bull for all the reasons that you said. I mean, I had a lot of success the first 4 months of the year, 3.5 months of the year, being on the right side of this, avoiding the US, being long international. Tried to get way too cute the last 6 weeks, and sort of got steamrolled. Luckily, was a slave to my levels, got out, avoided catastrophe. But at this point, I mean, we always lean long. We've been more long international than US, but we do have US exposure now. We like a lot of the sectors actually. Sometimes the trades that you get yourself into are the trades that make you feel the sickest to your stomach, and then they end up being some of your better trades. So we're long SPY now as a portion of our portfolio from 590. So we did get long. I wish I had gotten long down at 483 when, after Liberation Day, we tried to short for 60, 70 points and then sat out another 20 before we finally got long. So maybe if you're really looking to do something, maybe I'm like the Kramer indicator and you might want to short here at this point. But we, at least in the intermediate term, we're long until we see some kind of deterioration, because as to your point, nothing seems to be stopping this market. No matter what comes out, no matter what's said, no matter what's done, we get a little blip, maybe a day pullback, and then the rally resumes. So I think it's probably safer.
I mean, we just had it just now. We just had jobless claims 7 minutes ago come out. The S&P's dipped 10 points. They bought it back immediately. Like they can't help themselves. So they bought it back immediately. It's unbelievable, the resilience of this market. I've been saying I think it's the most resilient market I've ever seen, because there's a lot of things to worry about here, but the market doesn't care about any of them. So I've also been arguing, just because price is telling me, I think the stock market wants to go to all-time highs. Yeah, I think we could hit all-time highs here in June. So, I mean, if the market's not going to go down on any bad news, unless we get something major happen that we don't foresee coming, and there's always could be something major happening, it's hard to derail this bull thesis here. There's people who are money managers who are underinvested. One of the most hated rallies probably in the last number of years, because people really thought the tariff tantrum was going to be, even including myself, I thought it could get ugly. I thought we were going to come back, and I thought we were oversold. I just didn't think we were going to get all back. I mean, unbelievable, the resilience. V bottom here once again. Seems like that's all the market does lately is V bottom. COVID, and then all these other, little dips, just V's, little V's all over the place. The V bottom's the new cool thing here, Jim.
Yeah, the only thing I think that could be worse than trying to manage money like we do in this, and I couldn't imagine being you see some of these CTAs and managed futures funds, and they're trying to ride these trends, and hopefully they're looking at longer term trend averages or trend indicators, because if you're trying to ride a short-term trend, especially if you're trying to press a short, you are just getting run over in this market, because it is insanely resilient.
People are complaining about the charts. Joel will be back here tomorrow with his chart. Actually, not till Monday with his charts. I will try different software here tomorrow. I'm not a big technician, so charts are not the biggest thing on my thing. I don't even use these IB charts, to be honest with you. So, I talk about all the different strategies that I use. I've never been a big technician, so I've never really put a lot of weight in charts. I make very little money from charts, but that's my own trading. We talk about that over in the STN room. Jim, let's put on your long-term hat here for a second. Like, let's take off the short-term hat, because you are one of our long-term money managers that we've went to for a long time for ideas. And obviously, let's just take on a 5 or 10 year time horizon. Where are you, just like, if you're a long-term money manager, are you just always just buying the dip? Isn't that just a strategy that works long-term? Like, and just talk long-term money management, and how you approach it.
Yeah, I mean, to that point, if you're really talking 5-10 year periods, I mean, playing games with shorting and things like that are probably going to be a losing effort. I mean, you want to be invested. I think there are tilts you can make, and if you really want to look out like on a 10-year time frame, if that's really your time frame, I think right now it would make sense after the preceding 10 years where if you had gone back 10 years ago and looked at sort of the thesis for the next 10, I think it would have made sense to be more US focused, more growth focused, because 10 years ago, those were areas that had lagged the previous 10 years. So you look for that catch-up trade. So what's that catch-up trade now? I think that the prospects over the next 10 years, if that's the question, are a lot brighter in international markets, in emerging markets, even in more value-oriented names and sectors. I think if you gun to the head asking me specifically, I think large cap growth will underperform international and emerging markets over the next 10 years, large cap US growth. Now, that doesn't mean it's going to underperform in the next
What's your
30 days.
favorite?
Go ahead.
Favorite ETFs, international ETFs. I got EFA up there right now, but where are you looking internationally?
Yeah, I mean, we're pretty well diversified like we've been all year. I mean, we've liked Brazil all year. That's been a good one. If you want to get a little bit more speculative, one place, again, a longer term bet, if you want to buy and hold for a handful of years, we really think the Colombian market and Colombian ETF looks attractive. It's been a significant and severe underperformer for the last decade or at least several years. We think that this one, we use GXG.
Okay.
So again,
a lot of these stocks sitting back near highs now, though, too.
Yeah. And so, but again, we have to remember the conversation here is centered around a 10-year time horizon, not over the next 1 to 3 months, which is what I come on and talk about a lot of the time. So I think you could be here. I think you could be in Brazil. And then we still just like, the typical EFA markets over the next 10 years, especially if you compare them to the US market. We like Europe. We like Japan. We like Australia. Some of those markets we think could outperform the US over the next 10 years. And people forget. I mean, and Dennis, we talked about this in the STN room last week. People forget when you and I started in the business, we went through a 10-year period where no one wanted large cap growth. It was international. It was emerging markets. Yeah. I mean, everyone talks about the lost decade from 2000 to almost 2013. But if you had investments in even simple things like EFA or EEM during that period, those types of markets, those types of sectors, you had double-digit returns during that time frame while the U.S. markets went nowhere. So it's not unprecedented. It's just people have a short memory. And I think if you're looking longer term, that's something that I wouldn't be surprised to see play out over the next decade.
Here I am. Triple D is going to...
So sticking with that international theme here. Oh,
go ahead.
Spencer. I'm going to shut down my IB charts because they are eating up my RAM. And I'm going to switch over to trade ideas charts. So just give me a second here. I'll go to the background and stop showing this. And I'm going to let Jim, let you run with it for a second while I shut that down. I'll be back in like 1 minute. New charts.
Cool.
Because people don't like these charts anyways.
Could you tell where Dennis was going with that question, sticking with the international theme, Jim?
No, I could not. I am not that as much as I'd love to be able to predict future events like that, help me with my trading. I do not know where he was going.
I just sat back down at my desk because I went and filled up my coffee. Did you already go over sectors that you're liking and not liking? I know that's something that you usually get into here on pre-market prep.
If you want to talk, if we want to sort of pivot to U.S. sectors, You know, we're bullish pretty much right now across the board because it's just hard not to be. Two sectors that I think were maybe a little less bullish on, if I want to point to some things that I might at least have a neutral stance on and or avoid, depending on how tactical you want to be, are energy and healthcare. We think the momentum's not quite there right now. We think there's some headwinds to both sectors. And so those are sectors that we're still allocated to, although in a smaller way. Same thing, you know, if you want to go into the commodities trade, which we've been big believers in all year long. Oil's another one that we have a small long in, but it's much smaller than some of our other commodity positions, gold, silver, and the miners, which I can't believe we, you know, when we bought the miners a month or so ago, everyone was, I think, surprised that we would want to buy it up here. But, you know, here we are on, you know, let's just look at GDX. And, you know, we bought this thing at 48. And I remember, you know, whether it was on X or in different places, oh, how could you buy this thing at 48? And, you know, now we're above 53 and I think trading even higher than that here in the pre-market. So commodities just continue to be like everything else in this market, kind of a buy the dip mentality. Gold had a little pullback and now it's looks like it wants to get back to all-time highs. So still bullish on commodities, international. You know, it's hard with the exception of long-term treasuries. That would be the only area that we're truly bearish on. And then I think it does make sense, though, up here at these levels, depending on your level of sophistication and how you like to trade, to maybe look to put a hedge on here and there that could protect at least a portion of your portfolio in the event that we wake up one morning and have some kind of headline or major, you know, landmine that blows up. And so, you know, if you're a regular retail trader, you don't want to go into the option space or something like that. You can look at ETFs like Chaos, CAOS, which is a tail risk hedging strategy that does a really nice job in real fast, volatile type events of protecting your portfolio. You do have to trade around it a little bit. Like in April, I think it spiked 8% on that one day. So you want to be able to remove the position when you get something like that. You also, if you're a more sophisticated investor, could look at options. You know, I've got about a 6% position. I'm looking at my portfolio right now in what I would call hedging type strategies, just to protect against, you know, the wake up and Trump fires off a 2 a.m. tweet that rocks the market. You know, I just want to make sure up at these levels that I have at least a little bit of protection, seeing as, you know, dovetailing back to where we started, I am that reluctant bull at this point. And maybe I shouldn't be reluctant. Maybe we're just going to keep running. So,
Jim, okay, I'm going to throw you under the bus here. I did this in STN, but we haven't done it on pre-market prep here. And I'm going to put your long-term investing hat back on, and I want you to give me 3 stocks for the long term. We did this in the STN room, but we have not done it for our pre-market prep listeners. And I want you to think like 5 to 10 years down the road. If you have to buy 3 stocks today, what are those 3 stocks going to be?
Yeah, I'll give you 3 and a bonus. And we talked about this last time.
Awesome.
And 2 of them are going to be really boring. One maybe is a little more exciting, but 10-year holds, stocks that I think have really good moats that are going to continue to take market share and be the leaders, and their stock price will follow suit. Amazon's one. It's very hard to bet against Amazon.
Breaking in news.
Trump Xi hold call according to the Chinese state media. Seen that via Bloomberg. I don't have details yet. I'm sure there's going to be details coming, but President Xi and Trump did hold a call. That might be the extent of our news here, that they held a call. Is it notable? I mean, Trump and the Chinese president holding the call? I think so. Yeah, I think so.
Yeah, I mean, SPY likes it. The S&P likes it. So
yeah.
You look to the market, Jim. Well said. Well said.
So sorry to interrupt you there, Jim, because we had to break in
good.
because thanks pre-market prep chat. Thanks, obviously, because we want to break in the news when we get it. So we had a big pop here. I mean, we go down on some of the bad headlines and we rally right back, and then we just go up on like potential talks. So I mean, it's unbelievable. This market just is like the most silver lining market ever. Okay, so going back to your 4 stock picks, 3 and a bonus. Start now.
So Amazon, pretty self-explanatory. Think they continue to dominate. AWS, I mean, e-commerce, it's not going away. They'll figure out a way to continue to eat people's lunches. They have the ability to basically out cost cut and outprice everybody out there. We talked about this in STN. My wife had a small business that sold via Amazon. They took 60 cents of every dollar she brought in. And they have millions of these sellers, and their margins are insane. And they treat their sellers on their platforms like dog, you know what, but it's good for the consumer and it's good for the stock, I guess. So long term, I like Amazon. Number 2, JP Morgan, another pretty boring name. I think this is one, though. I think regulation. So I think we're past sort of peak regulation in the banks. I think, we had the Wells Fargo news yesterday or the day before, whenever it was. I think this is still the best in class. I want to be in this space. I think financials may be poised to have a good decade. And I think you want to be best in breed if you're looking to buy a stock and hold it for 10 years. And I think JP Morgan is that pick for me, wanting to have exposure in the financial markets. Number 3, I think, playing into my 2 themes, international and commodity-based names, which I think both could have a really good decade. My third pick is Vale, V-A-L-E. And I like that name again for multiple reasons. I think this is a stock that has been beaten up, hasn't done much. I like it, again, as a drawer stock for the next 10 years. And then my 4th pick, and this one may get me some anger or may get me some likes, I'm not sure. But however you want to play it, I'll just go simply because, Dennis, you talked me into why not just buy the underlying? Why try to get cute? And that's Bitcoin. So I'll go with IBIT as my 4th pick for the next decade. I've wanted to hate Bitcoin for years. I think it's,
me too.
You hear the administration, you see the adoption. I don't know, Joel tells me all the time, I'll buy Bitcoin when I can walk into a store and pay for something as easily as I can pay for it with cash. I get that argument, but talk about another resilient asset. This is another one that every time we get a dip, you have support, you have buyers. So would I put 50% of my portfolio in this? Of course not. But as a play to put a small percentage, 1 to 5% of my portfolio and hold it for the next 10 years. If it goes to 0, I've lost 1 to 5%. If it goes to $1 million, like some people are predicting, it's a home run. I think that's another great 10-year hold.
It's so I have Amazon in the long-term portfolio. I had JP Morgan for a while, but I want it back in. I have Bitcoin in my long-term portfolio. I don't have LA. That's the one that I don't have here. 8.79% dividend isn't bad while you wait there. Dividend sounds safe?
Yeah, that's whenever I hear an 8-9% dividend, I don't necessarily know that I want to go out on a limb and say that it's completely safe. I think they are a structurally sound company, and I also think they have a government backing, which they're the state champion, the national champion. And so I think from that standpoint, whenever you're in that situation, and you like the country as a whole, you like you like that ETF. I think that as a byproduct of that, your national champion's going to perform well. So again, somewhat speculative. I think I went pretty safe with Amazon and JP Morgan. Remains to be seen, but get a little bit more speculative with Vale and Bitcoin.
That's Jim Tassoni giving you your long-term outlook. 4 picks for the long term. Thanks, Jim. Always appreciate your insights to the market. We'll be talking again real soon.
Sounds good, guys. Have a good one.
Later, Jim. Real quick, more on the Trump-Xi headline. Apparently, the phone call was at President Trump's request. That is an interesting little tidbit there. Is Trump leaning toward wanting some kind of deal? I think that's probably how the street is going to take it. Looking at futures here, SP 500 futures did mark a new intraday high, 6,016.5, 6,016.5. We're just under 6,000 here right now. What do you make of this headline we got here just 10 minutes ago or so, Dennis?
I mean, this market is silver lining market, and it's funny, we can see clearly that Trump wants to make a deal a hell of a lot more than Xi needs to make a deal. Like I said this, I was on Dave Lauer's podcast yesterday talking with Dave, and we were talking this in depth, and we're like, Xi and China's in a very good position here because Trump's, losing his stuff over, and he's over here, and then, he's basically negotiating with himself and the public. China is always cool, calm, and collected. They're not going to make rash decisions on anything. They're not panicking over there. And there was the arguments being made that, a lot of people are actually, with U.S., putting tariffs on the world, it's actually making Europe, the rest of Europe, probably closer to China, which is probably really, not what Trump administration wants to do. But that's probably what is occurring to a certain extent here. So I think time is on China's side here. And I don't think you're going to get a China-U.S. deal anytime soon. I don't think it's coming anytime soon. Not at 50% tariffs. It's not coming. So I do not believe that the China is panicking whatsoever. But Trump is the art of the deal, wants the deal. He's got in his mind, he's got to make a deal. Now he's calling them. Let's make a deal. Let's get something going on. Let's figure this out. I mean, I think China's just sitting back and saying, keep negotiating against yourself here. So I think art of the deal here, maybe works in the end when he goes to 140, 50 to 140 and all the stuff. But I don't think China's in a panic at all here. And I don't think this deal coming anytime soon. I don't know what that means for the market. Like the market just, finds any reason to rally. So, I'm still sticking with my thesis that we're going to hit all-time highs on deals. So I think there's deals coming elsewhere first, though. I don't expect a China deal imminent. I think you will see deals from other countries before you see deals from China, because other countries are maybe in more of a situation where they need to make a deal more so than China does.
At least I think that is the sentiment of the market. I know that there's people out there who are going to disagree with the sentiment that you're suggesting, Triple D, but you're tapped into the market. This is where the market is leaning, I think. I'm
not. So just one more point. Yeah, we can do a couple ratings here too, just quickly. But
cool.
I'm not in these deals. I don't know. Like I'm not about the art of the deal, but I am about the art of the market. I'm trading the market continuously, and I can tell you, when we go down on bad news, we get bought back, and then we go up and we continue to go. So I mean, the market wants all-time highs. It just looks like it. I mean, there may be a rug pull here eventually. But right now, I don't see any cloudy skies for the market here. I think we're going to hit all-time highs this month. I've been saying it for a few weeks here now. I'm going to stick with that thesis.
I like it. Let's do one quick rating here. Chewy downgraded from buy to hold by an analyst at Jefferies, citing valuation ahead of the earnings. The analyst saying valuation seems, quote, primed for a first quarter beat and raise. And this analyst saying that's not likely for Chewy for Q1. What do you think about this call, Dennis?
Stocks come so far. The dog food stock has run from $30 to $47 in a straight line here from April. I mean, we're sitting up here. Now, we're not $100 where you're back in 2020 when everything was just $20 to $110, $20. Oh, you got to buy dog food stock. It's a dog food internet dog food sales. I mean, this isn't some AI growth name killer thing here. So I don't know. I feel like this run here from 30 to 47, up 60% in 6 weeks. I feel like the easy money has been made in Chewy. So I'd be downgrading it to hold as well.
High bar here. Going
when
into
do
the
they
report. I don't know. I was just gonna say, I don't know when they report. Let me look real
Maybe
quick.
they're already reported. I don't follow Chewy that close. I know
Let's
Joel
see.
uses the service. He says it's
It
great. I'm sure it's great
is
service.
Wednesday next week. That's June 11th.
Oh, so it's coming. Okay, good to know.
Next week. All right, folks, we are going to kick it over to the STN room, StockTraderNetwork.com. There is a code you can use if you want to check it out, PMPSTN. Dennis and I are going to go do some programming over there till about 10, and then we are having Shad Marquise on from the KE report from 10 to 10:15. Be talking some commodities. We had a good commodities guest on yesterday, Al Kleiss. We'll get some more commodities talk here from Shad. All right, folks, good pre-market prep session here this morning. We'll see you over in STN.